In this video, I want to talk about the common sense behind trading Forex market. The common sense behind trading Forex market. There are actually two parts of this lesson. And the first part is the benefit of trading the Forex market. The benefits of trading the Forex market. And the second part will be in general as to the understanding of Forex market in general, as to what it can give and what it cannot give. So I'll be making some sort of comparison there. Okay, though these things that I'm about to talk about are actually in our brochure, but I just want to highlight some things on them. The first one that I want to take is one of the first benefits of trading the Forex market is that, or the common sense behind it is that it is cost effective, or cost effectiveness. What it means is that Forex trading is a business. It's a business, and businesses need a lot of money. In fact, a lot of money, a lot of processes, and many people to operate. Most businesses that can actually yield money, like Forex. And there is no market that can actually give money like Forex or the financial market. But you'll find out that the setup of Forex trading, it's easy. All you need to do is to have a computer, have internet connection, have your deposit, of course, have your knowledge first. And once you have this, it is easy for you to start wherever. So you don't incur a lot of a cost apart from your internet that you'll be paying for, or your data. 2, flexibility. The Forex market is the only market that is open 24 hours, 5 days a week. So you have 20 days working, which means you have the weekend to yourself to do other things. What it means is that it is very, very, very friendly. So you can trade at any time that you want to trade. So it is very, very flexible. You may not see it, but over time you'll find out that Forex trading can give you the comfort kind of life that you want. Multiple stream income, multiple stream or passive income. Because Forex trading is flexible, you can be trading Forex alongside keeping your job. When you place trades in the morning, you come back in the evening to look at them. When you place trades in the evening, you look at them in the morning before going to work. It's as simple as that. So you will be making money alongside your salary. So you don't need to quit your job. For example, if you place this trade here, you just leave them now. Before you go to sleep or evening after work, you come and check the indicators and find out whether to sell or buy. Put your stop losses, your take profits, you go to sleep. In the morning, Those that will give you profit will give you, and those that you leave on, you leave them. If you have to add another trade, you add a trade, and then you go to work. If you have time, break time, you can check your trades. Or when you close from work, you check your trades. So you can actually trade whilst working. And you'll find out that sometimes the money or the profit you will make will be more than your salary. Definitely. Even if you have good deposit, that is good capital, you'll find out that the money that you'll be making will be far better than the capital, that far better than your salary, and it will help you to transform your financial status. The fourth one is entrepreneurship. When you begin to trade as a part-time trader, over time you will find out that you will make a lot of money, and then you can open up what an inward trading floor. You can open a trading floor and have people to trade for you in your name. The fact that you are not trading for anybody and it's your own money that you are trading with, you get people to trade, to train, and then they trade for you and you pay them salaries. Over time you will find out that it will grow. You'll find out that it will grow. Low startup capital. In Forex, you can start as low as $100 with some brokers. Some brokers also require more money. So some $250, some $200, some even $50. You can deposit. Some even $20. So it's easy to actually start with what? The trading business. It's easy to start with the trading business. That is the number 5. And then number 6, simplicity. It is easy to trade the Forex market. You can see that you can just pick few, maybe 4 pairs, as I said earlier on, in understanding the most basic and important tools on the MT4. You'll find out you can select few of these pairs and master them. You don't need to trade everything, and you'll find out that the pairs here are not that much. They are not that many, so you can actually what navigate your way through them. You can analyze few to trade, not like the traditional stock market that you have to analyze thousands of what stocks before being able to make your decision as to which ones you will be what investing on. So basically you'll find out that it's easy to do in the market. It's easy. It's very, very easy to trade in the market. On the second part, let's look at the second part of the common sense behind trading Forex market. Your investment determines your profit. Your investment determines your profit. What do I mean? If you have a small deposit, say $1,000, you don't expect to be making money as someone who has deposited $10,000. This is what brings greed, because the one trading $1,000, knowing what the one trading $10,000 is making, that is the profit or the gains, he or she also want to make the same. It is not possible. So you'll find out that your investment amount will determine your profit margin. 2. Investment amount and the lot size. If you want to make more money, it means you need more deposit. So if you don't have more deposit, then you have to grow the small capital so that you can have more capital now. So you are growing your small capital to become your bigger capital. So it requires patience. It requires you to be more diligent. It requires you to be more disciplined. It requires you to be more risk tolerance. All right. Then also know that the market is there tomorrow. So when you are trading and you are exhausted or there is no market to trade, you just have to lie low and let the market be. And when you make a lot of money, if you are trading, market is moving, and you've been able to meet your target, immediately you meet your target, you have to start to reduce your lot sizes, because the length at which it will take for you to meet your target, mostly the trend will start to reverse, and it's important that you come out of the market to avoid mistakes. The next one is you have to know that information is good, but information will not change your state of trading, but knowing how to do it will. The know-how, it's always important in the trading business. It's always important in the trading business. For example, the bigger the lot size, the bigger your stop losses will be, and the bigger your profits will also. This information is good, but how do you apply it? And that is why you have to read that book attached to this product, The Simplest Method to Make Money Personally, Trading the Forex Market. There's a hypothesis there. There is a projection made there that you can follow. And knowing how to do it also, it's now you know how to use the EMA 512 parabolic SAR, stochastic, relative index, MACD, Bollinger Bands, and all that, knowing how to analyze the trend. It is now time to apply them. You have the information, you have the knowledge, you have the understanding. Application is important for you to now get the money that you need. You cannot be trading all the time. Once you place your trades, you can let the market be. Do other things. So what it means is that you can be trading and be doing other businesses. As I said in the lesson on psychology. Know the type of trader that you are. It's important. It's one of the common sense that is behind trading the forex market. If you know the type of trader you are, you will exhibit that personality, and in turn you will gain more, because you will no more be emotional. You will not be emotionalized about everything. Your psychology of trading will be at its best, because you will be using the characteristics of that type of trader that you are or you want to be. If you are a scalper, you know that you need to sit by the screen 6 to 8 hours maximum, minimum 4 hours. So you don't need interactions. You don't need to interact. You don't have to be distracted. You just have to focus and make the money that you have to make and get out and do other things. If you are a day trader, you place your trades in the morning. By the end of the day, you close them. When you read the book, The Common Foundation for Trading Forex Successfully, all those things are there. So you need to know the type of trader you are or you want to be. It's one of the best ways of what? Making it big in the market. And know also if you can trade smaller accounts or not. People will always tell you that, oh, you can trade any account. Good. When you are starting, you can trade any account size. But when you reach a level where you have seen money, you have made a lot of money, and you are trading bigger accounts, because of the great factor that is associated with the market, it is very difficult for you to trade smaller accounts. You may even be forgetting this smaller account that you are trading. So it's important that you take your time, raise funds, raise enough funds, have a sizable account or capital, then you can start trading. It's like pulling back, taking a break, and bouncing back into the market. The trend will always return in the short and in the middle term. What it means is that if this trend is moving this way, let's use say a higher time frame, just watch. Okay, so if you look at it, you find out that it started buying from here and it bought all this while. Then now it's selling. Then it's selling. So what is important is you to know that when the trend goes against you, and if you have good capital, you can actually leave it and trade other pairs whilst you wait for its return. That is when probably you have not placed stop losses and the trend has gone far against you. Then also, on the other hand, if you want to make more profit, you can leave the trend to go, right? And then when it's coming down, you pick your profit and then what? You follow it again. But know that the trends in the short and in the middle term, they always go up and down. They will go down and then they will come back for you again. It's important to, I'm just repeating this, to be more serious on when you buy and when you sell. When you buy and when you sell. Then also, this is very, very important. If you are losing on your trades constantly, stop trading and check what you are not doing well, or that is what you are not doing right. Correct yourself in the demo. Practice the demo and get used to the system. Then bounce back to the live account. If you don't stop trading, you will never recognize what you are doing wrong or the mistakes that you are actually making. So it's always important that you stop trading and then you come back so that you will correct all your mistakes. So basically, these are the common sense behind trading the Forex market. Now, if you have $1,000, or let's say if you have $500 that you are trading, and every week you are making $50 to $100. Maybe let's say a range. You are trading with $500. You have a capital trading of $500, and every week you are able to make constantly between $50 to $100. What it means is that if you keep using the same lot sizes without increasing them, by the end of the year, 2 years, or by the end of the month, you'll find out that you'll be making constant profit. And the return on that $500 in a year will be overwhelming. So it means that you need to keep using the same lot sizes. This is one of the best common sense that I have discovered. Do not increase the lot size, because the lot size that are giving you that $50 to $100 in the long run will be giving you so much money. But you'll find out that once you increase the lot size, it's going to reduce your account once the trend goes against you or the trade goes against you. Obviously, your stop losses will be what? Higher when you use bigger lot sizes. So it's common sense to use the smaller lot sizes that is giving you same amount of money. And then also, if you are trading a $500 account and your withdrawal target is $100 or $200, once you make or you meet the target, withdraw your profit. It helps you to maintain the same lot size in order to make another $100 to $200. Then you withdraw. You'll find out that over time you will be banking a lot of money, and you will not be tempted to increase the lot size because your capital is back to its normal state, $500, depending on how much you are using or the capital that you are trading. I'm just using the $500 as an example. In this way, over time, in the long run, you'll find out that you profit much more from the market. So try to practice this, and you'll find out that you will be making so much money. The market is true, the market is real, and once you are able to play smartness with it, you will make a lot. The trading is business, and it has to be treated as such, as business. You have to be smart, and most of the things on this market, it's all smartness, and that is common sense. That is common sense. Most of the things, you just have to apply your mind to the system, and you'll find out that you'll be making good money from the market. Thank you for being obedient, and I believe that you practice all these things that are in the videos and in the books, and you will see the results. And don't forget your source, God, and pay your tithe and do good to people and the society. Thank you.